Hello, everyone. Welcome to the stock-specific class here for Thursday, May the 12th. If you have any questions during the week or any that I don't get to in the live class here, make sure you send those to jerry@traderspro.com, especially those of you that are new. You want to make sure you have that email address written down so you can address your questions to me when you have them. All right, let's get started with the update. As I mentioned on Tuesday, I don't think I'm going to have a lot of, in fact, I know I'm not going to have a lot of trades for today. The market is in a position right now where you don't really want to be buying a whole lot. Good time to be on the sidelines, but we're getting closer. There are some things I'm going to point out here that point towards at least some sort of an oversold rally that I think could take place. A bounce, and a lot of it has to do with a lot of that belief has to do with what took place yesterday. As I talked about on Tuesday, we broke below that key support level. I thought we'd see some panic selling. We didn't. Yesterday, what was strange is that we had another down day. Markets closing in the lows of the day, but the VIX was down. And whenever the market is down and the VIX is, whenever the VIX is moving in the same direction as the market, you want to pay attention. In this case, what it was showing me was there wasn't any panic in the selling. There wasn't any concern with the fact that we were selling yesterday. There really doesn't seem to be much concern with the selling today either. Although the VIX is up a little bit today, it's not up by very much, even though the markets are, they tried to rally and they rolled over. Normally that would create a spike in the VIX. We're not seeing it. So what does that mean? Well, what that tells me is that a lot of the big fund managers, remember the VIX is measuring the implied volatility of those index options, those S&P index options. So that's what those institutional traders use to hedge their positions, to protect themselves when markets are in free fall. Those put options go up in value when the market goes down in value, and when I see the VIX is down and the market is down, it tells me that they've gotten their protection. They're not too worried about the selling because their put options are going to go up in value if the market goes down in value. So what that means is that now put options have an expiration date. So they're hedged right now. They're not worried right now, but that doesn't mean that they're protected for a long period of time. Typically, when you buy protected puts, you don't go out very far because you have to pay for time. You have to pay the longer out you go. And so I would assume that a lot of those protected puts are shorter term, within a couple weeks. And so what I think could happen here is that I think the market could have a sharp rally. What that would do is it would attract some buying into the market. Some people thinking that we're at the bottom, we're at the lows, but it would also cause these big institutional traders to not re-up their put options, not buy more protected puts, at least not yet, because again, you don't want to spend that money if you don't think you need to spend that money. And if it looks like the market might have bottomed and it's starting to rally, I think there's going to be at least a large number, a good number of those institutional traders that. Not that they wouldn't buy any more protected puts at all, but they're not going to be as aggressive in buying them, which would leave them exposed if the market then rolled over, and that again could trigger that panic selling that I keep referring to, and I'll keep referring to until we see it because it's likely to happen at some point. So, and this is something I talked about earlier in the week where I was worried that too many people are waiting for that panic sell-off to get in. If everyone's kind of waiting for the same thing, the market will find a way to not necessarily make it not happen, but make it maybe not appear to happen the way that everyone's expecting it to. In other words, we could get a rally like we got back in March, where we're up consecutive days in a row. Like I said, in March, you can go back and view those updates. I was wondering if maybe that was it. We were seeing such consistent buying that maybe we were going to go up from there, or possibly go to new all-time highs from there. I think something similar could happen, because it's got to alleviate. It's got to alleviate the condition. Right now the market's dropping, but like I said, nobody's concerned about it. And that's, in my mind, that's what would get the market concerned about it, is if we move. It doesn't have to be that we have a rally. We could just move sideways, and time could go by to where those protected puts expire or need to be sold to make whatever profit they've made. And then now those traders have to make a decision to buy more, spend the money on more protection, or take their chances. And I think that's what could create that additional volatility in the market down the road. So we'll see how it kind of plays out. We've got more updates coming up that I can talk about it if I start seeing some of that taking place. But I'm going to show you a couple things when we get to the charts that are really starting to lead me towards thinking that we could get a little bit of a rally here sometime soon. Now, it's not looking that way today. We tried to rally today. We've seen that happen in the last few days. I'll show you where we try to rally early in the day and then it fades. I'll explain what's typically going on there when you see that. And now, as far as the direction alerts, we're really close to moving into that bear market area there. In fact, with the markets down today, if we close at the lows today, remember this update's overnight. I would assume that we're going to move into bear market territory overnight, unless the markets rally off the lows going into the closes. Not looking that way right now, but it's definitely possible. I think that this is going to move into that bear market territory tomorrow, and for the first time in a long time, shift us from bull to bear. So keep an eye on that. We're real close on that signal. Again, we're in the extreme reversal risk range, but we're not at the far left side of that for momentum and for breadth. They're kind of both in the same spot right here. Now, again, what does that mean? Well, it means we're in a position, we are oversold. We're not so extreme oversold though that you would expect a bounce to be imminent. And like I said, this isn't reflecting today's price action in the indicator yet. So it's possible that after this updates overnight, that we could be closer to that left side of the extreme range. And by the way, I'm not saying that with the way that things could close today, it could be into next week before we see a little bit of a market rally. We could see more selling tomorrow even. I don't see any sort of price action that's indicating a reversal, but I'd start looking for that. And I'll explain what I'd be looking for here in just a second when we look at the charts of the indexes here. But sentiment is still pretty high. Again, I would expect that we're going to get out of the complacency range. We get into at least this trending range when we're near a bottom. It's been elevated the whole time. Even the whole sell-off here, we've been in this upper range here. So but that is something we can't ignore. It is telling us that there's just too many people that just don't believe that there's any big concern. As far as we've dropped, that we just haven't, there's just been no panic. And again, I talked about this on Tuesday. That was the puzzling thing about Monday was that, or Friday's move, it was just so orderly as it dropped. I think it was Friday or Monday. I'll have to look at the chart here, but it was just orderly. It wasn't, again, you didn't get these big, you'll know when it's a panic sell because the numbers will usually be huge. You'll see the Dow down 2,000 points. You'll see the circuit breakers come on that slow the trading down because the computers are going wild trying to sell, and there's just no liquidity. There's nobody to buy, and when everyone's trying to sell, nobody's going to buy or trying to buy. The prices can drop very, very dramatically, and they do. And that's when you start to see that craziness. We don't get it very often, but when it happens, it's pretty obvious. And again, for those who are pretty new to trading, I want you to experience it at some point, so you know what you're looking for, and you can, you got a reference point now for in the future when it happens again. You can recognize what panic selling looks like and what the behavior is like, and learn how to trade it, learn how to trade against it a lot of times, which is a very difficult thing to do. You're not going to feel like wanting to buy in those conditions, but that's exactly when you'd at least start to buy, or at least start to look for the reversal. Have your watch list ready, have your stocks ready that you want to jump into at that point. The buy-sell ratios are pretty wide. I've talked about this on Tuesday, that they're in a position where we could get a little bit of a rally to have those come closer together. That's a pretty wide range right there. And I'm going to show you the buy-sell ratios on the indexes. You can see how extreme it is as well. Sentiment is not yet down in that extreme range where the green line is, but we're close, and we're close enough to, like I said, to where you would consider us fairly oversold right here. But look at the indexes. I talked about back in the summer, I was talking about overbought conditions when these ratios, when you get double-digit ratios, 10-to-1. This is the buys versus the sells. It's the complete opposite. I mean, you look at look at the Dow Industrials. You've got 21 of them, the 30 Dow stocks. 21 of them are sells right now. Only one of them has a buy signal. In fact, let's take a look at what that one is. Merck is the only one in the Dow that has a buy signal. You've got, just look at the ratios. Look at the Russell. Where's the Russell 2000? Down here at the bottom. You've got 971 in the sells, 239 in the holds, and only 82 in the buy range right there. The Russell 3000, 1,500 stocks with sells, only 117 with buys. So this is, again, all we're waiting for is that panic flush that almost always takes place. Everything else is pointing to a bottom or near a bottom right here. So this is we're getting very, very close to a situation where we could start to see the market start trending back up again. So we've been patient. Hopefully that patience is paying off. If you've been following me for a while, and actually following what we've been doing, you've actually done pretty well. We've gotten into these inverse ETFs that are making money when the market goes down. They're going up in value, and so we're seeing nice gains even though the market's declining. And then we'll reverse and we'll get into trades. And like I said, it'll be boring again because we'll have all our money in trades. And we'll just be waiting for everything to kind of trend back up and go up in value, and we'll really start seeing the account go up at that point. So, but I thought I'd point that out. We're definitely starting to see evidence that we're getting to extremes. But let's get into the charts, and let me show you a couple things here. Market update here. So you can see what happened today. Well, you can see what happened the last couple of days. So yesterday, here's where we opened. We tried to rally early in the day. It looked like we might be trying to get back, go positive, close higher than where we opened, but we faded, closed near the lows of the day down here. Same thing today. We gapped down at the open, tried to rally back up. Looked like we were going to get that kind of that bullish reversal type candle, and then now we faded. We're down near the lows of the day. What this is showing me right here, and is that and typically when it's moving the markets, you're always assuming it's big institutional traders. The retail traders just aren't big enough, and they're not. They're just not big enough to cause the whole markets to move. They are part of the trading crowd, so don't get me wrong, but they're not the ones that are really moving the market. It's just big institutional traders. As I've told you all along, what we're trying to do is get really good at recognizing what those big institutional traders are doing and try to follow them. We recognize that we can't move the markets, even if we can outguess them, or maybe we are smarter than them as far as recognizing when inflation peaks and things like that. We can't move the market, and so let them figure out if we peaked at inflation has peaked, or if what the Fed is doing is good for the market or bad for the market. Let them make those or determine whether it's bullish or bearish, and then they're going to buy or they're going to sell, and then we're just going to follow along. Let's not get too caught up with trying to predict things or try to outsmart everyone. Now, you might have a hobby of it. You might want to, maybe you've researched the Federal Reserve and it's a hobby of yours to read all their notes from their meetings and try to figure out what they're thinking. That's fine. But again, if you don't want to do that, which is me, you don't have to, and you can still be fine. If you can get really good at letting those big institutional traders read all that stuff and figure it out, life is so much simpler. But anyway, so what's happening is that at the open, as the market starts to try to rally, these big institutional traders are looking at that as an opportunity to sell. They're selling into those rallies. They're down. They're losing money. They don't want to be selling as things are dropping because they're selling for lower and lower prices. So you get a bounce. It's a little bit higher. You use that opportunity to sell into that rally, and that's what's happening. You're getting the attempted rally early on. Those big institutional traders are pushing it back down. We're not going to get a decent bounce until there's enough buyers to overcome that selling and for the market to be able to close higher than where it opened. So you're looking for something, maybe something like this where you do the opposite. You open, sellers push it down early, and then buyers bring it all the way back up into the close. That would be something you look for. You might look for something like this, where maybe it gaps down. We thought we might have that today, where we gap down, buyers push it up, and they're able to close it higher than where it opens. You're looking for that bullish reversal price action. Until then, this could keep happening, for a few more days or what have you. So again, I'm not trying to guess where we might rally. I need to see evidence that the buyers are strong enough, and really, I'd want to see a couple of days where you get back-to-back days where buyers step in. Now, the type of rip higher that I think could happen. This is a good example back here in March to look at. You had an up day right here that was finally, ending a lot of the decline that we'd been seeing. And then you had another up day and then another up day. And it was just moving sharply to the upside. And look at the opposite of what was happening on these days. We were opening lower and then we were closing at the highs of the day. We're opening lower. So people were buying the dips each day here as it opened lower. They were buying, closing it near the highs of the day. You'd want to see a similar activity. But I still think that's what we'd see is just a rally back up a little bit and then get that flush out move. Or like I said, it could be sideways where anything to just alleviate the protection, get time that goes by to where those put options expire or they're sold, and new ones aren't purchased. That can happen just in kind of a sideways move. Although I think a nice sharp rally would cause those big institutional traders to not want to spend the extra money on those protected puts. A sideways move, they still might do it, being concerned that we're not done selling yet. We've had a few of these little sideways moves that didn't last very long and then dropped. I think it could end up being something more like we've seen in March, but we'll see. One thing that I've been looking for is the Dow has been lagging lately, and today we're seeing that the Dow is having a stronger drop than some of the other indexes. At least the last time I had checked it was the case. In fact, it was a little bit of a mixed market day earlier when the Dow was down and the Nasdaq was up a little bit. Obviously that was earlier in the day, but this has been, the Dow has had the smaller drops during the most of this move down. So the fact that it's kind of catching up a little bit and having some bigger drops is another sign that maybe we're getting close to a short-term bottom that we could bounce off of, just an oversold bounce. I want to get to bonds. Now, on Tuesday, we were looking at, we had this bullish engulfing candle pattern. On Monday, we've been in this downtrend. We've seen it happen where we've gotten these little bounces and they don't last very long and then you continue to move down. We've got a bullish engulfing pattern there. Yesterday, we had this little compact move that was Tuesday when we had class. We had this little compact move on Tuesday. And then yesterday, we had another bullish engulfing candle pattern on bonds. Now, bonds have been beaten up. They are they've been in this kind of relentless downtrend. We can put it in context here, going back a couple of years. You can see a little bit bigger picture here. Now, we could be in an area here where we could start to see bonds rally a little bit. Now, that would mean that those bond yields would be going down, and that could be something that the market could look at as being bullish, because the bond yields have just been going up and up and up, and obviously that means that bonds the TLT is going down. We could see that could be something that's viewed as at least a short-term, bullishing of the market kind of hangs its hat on. But now, again, we got to look at this previous high right here. That was the last lower high in the TLT. You really need to get above that to be just the first signal that you could be in a trend reversal. Because so far, where we're at right now, we're still at a lower high. We got lower low. We hit a lower low already. We're still at a lower high. So you still have to view this as strong as those two bullish engulfing patterns were. You still have to view this as still in a downtrend. But if it can move up sharply here, meaning have an impulsive look to this where it's not choppy, but it's straight up and then breaks to a higher high right here, we could get, again, I'm not saying that you're going to see bonds, that's the end of the drop in bonds, but it could lead to maybe a larger correction within this downtrend. Let me go back to that 2-year chart. You can see we've had a few of these, but it could be something like we saw back here, where you rally for a few months. It's more choppy in the rally, and then maybe it leads to a further drop. But it could be something like that, getting ready to do something like that, where maybe it rallies back up to the underside of that this previous support area right here that it broke through, and then rolls over and keeps going down. But that's something to look at. Again, it's still a little bit early, but I think it's something we can start to keep an eye on there. And so it's this 122, 122.50, 122.43 area. You can look at the intraday high of that day, this day right here, which was, scroll down a little bit. It was 123.03. So basically 123. It gets above 123, the TLT. It will have basically gone to a higher high. Again, it doesn't mean that that's definitely a trend reversal. It just means that's the first signal of a potential trend reversal. What you'd look for is a break to a higher high, and then a pullback that's a little bit more choppy, or more corrective looking, that then leads to another move higher, which puts in now a higher low. You have a higher high, higher low, and now each move is pointing to a trend reversal at that point. So that's something we can kind of watch for. Who knows? Next week we could be gone to a lower low, and it could just be right back down again, and we'll be forgetting about this whole thing, or we'll be looking at this as the next lower high that it's got to get above to potentially put in a trend reversal. But that's something to keep an eye on. And the reason why this could happen, there's some people that believe with that CPI number that came out yesterday that maybe we're at peak inflation. Like I said, let the professional traders figure out if it's peak inflation or not, or if they think it's peak inflation or not. It'll be reflected in what they do. They're going to start buying if they think that we've reached peak inflation, and so we'll start trending up at that point, and then we'll just follow along. So I'm not going to get too caught up into trying to figure out whether we've hit peak inflation or not, but it could show up on the moving of the TLT. So that's why I'm spending some time on this. We're watching a little bit. Gold, we're going to just get through some of these. Oil is still moved back up again. We've been in the sideways range. So we'll see if it breaks out above here. It would likely mean it's going to start moving now. It's trending up. It's been moving sideways. I don't think that would be very bullish for the market. And so what you'd really probably want to see is to see if it starts trending down a little bit more. But I don't see it in the chart. Like I said on Tuesday, if it were to drop from here, this would be more of a volcano top, which is possible, but they're really rare. I think again, with how it plays out into the whole scenario I've outlined, is I think what we'll see oil break out. We'll probably see that panic sell-off coincide with that, and then maybe we reverse and see oil start coming back down, and maybe the market start rallying off of that. So we'll see. We'll see if it plays out the way I've outlined it. Like I said, I'm not trying to be Nostradamus. I just want to be prepared. I don't want something like this to catch me off guard and be wondering what's going on. I want to look at these things and how they kind of fit into how all the puzzle pieces fit in, and like I said, it hardly ever plays out exactly the way I anticipate it will play out, but a lot of times it's pretty scary close, and which is why I continue to do it. Dollar broke out of this little sideways range, clearly moved higher today. The VIX, I wanted to point out yesterday. So yesterday we had the market. So here's where the VIX closed on Tuesday. Here's where the VIX closed yesterday. So it closed lower. Actually, it closed the VIX. So the VIX closed lower with the market closing lower, and that's what I'm saying. There isn't that concern. And then now we're going low. We try to rally, and then we're slipping. We're dropping. Dow's down over 500 points, and look at the VIX is barely moving up. It's not. It just tells me that there's just not a lot of concern with the selling right here. And the only conclusion I can come up with is that these big traders are they're hedged. They've got their protected puts. They're not worried. They can sell as much as they want and drive prices down because their puts are going up in value and offsetting those losses. So, and so something's got to shake them out of that trade, shake them out of that, and that's why I think we're getting set up here for it's just getting a feel for a little bit of a rip higher in the market. So we'll see if that happens. Chip stocks, again, they look like they were starting to reverse, get a little bit of a bullish reversal, but back near the lows of the day. Now that's important with the SOXS trade that we're in. We're getting extreme on that, and I haven't decided yet if I'm going to exit that trade at the end of today. I got to kind of see how, because we could get a gap down tomorrow if we close at the lows of the day with a day like today. But I am getting close to where if we do bounce, I want to be out of those, because then we're just giving money back on those. They're our hedge trade right now. And I'll show you that when we look at the portfolio. I'll show you what I'm talking about. And the SARC trade has a bearish reversal candle today, at least last time I checked. Maybe that's changed. And that maybe I'll get out of that one and just hold the SOXS trade. But like I said, chip stocks look like they were maybe having a bullish reversal. But that's changed. We're now at the lows of the day. Transport, same thing. They try to reverse. By the way, another sign that you could be getting close to a bottom, I can't remember if I talked about this on Tuesday, is that you start to, you hear Jim Cramer on CNBC, his big theme is there's always a bull market somewhere and he's trying to find it for you. The problem at a major bottom in the markets is there is no bull market anywhere. Everything is down and everything looks ugly. And you have to start to see carnage. Companies going out of business. We're starting to see that with the SPACs. Remember, the SPACs were the real speculative trades that were going on a couple of years ago. You've got the meme stocks. You've got the Cathie Wood ARC Innovation stocks. That these are these small cap stocks. That you got the fintech stocks. There's going to be some of these that go out of business in the process of what's going on right now. And usually the first sign before that is you're going to start to see these big downgrades. They haven't happened yet either, where these and this is how stupid, if you're looking at upgrades and downgrades by these analysts, it's stupid. They haven't even downgraded a lot of these stocks yet. They're hoping they don't have to, and it happens all the time. By the time they finally throw in the towel and say, okay, we're downgrading this stock, it's already been beaten up. It's already done going down. And that's why it's a contrarian view, is that when you start to see all these downgrades start happening, okay, we got to be at a bottom. But think about that for a second. Think how ridiculous that is if you're making your trade decision on these analysts. You're now finally selling after all the carnage right when it's going to go back up again. And by the time they start to upgrade it, you'll probably miss the rally, because when they finally feel strong enough or bullish enough to upgrade the stock again, you've missed the big part of the rally. Never base your trade decisions on analysts, upgrades and downgrades. You'll go broke faster than anybody possible in the markets. It's just ridiculous, and that's why it's so funny that we traders, we professional traders, we that's a sign for us that we're at a bottom, is when they start these big downgrades. But Bitcoin, it's getting obliterated. All these cryptocurrencies are getting obliterated, and some of them are going to go bankrupt. You're starting to see it already. I'm not a big crypto person, so I'm not familiar with I'm not up to speed with all the. I do know that there's a couple of them they're mentioning right now that are I think one of them got the trading got suspended on it today. That's not a good sign when they suspend trading on it. It usually means it's about to collapse. It's about to go bankrupt. But some of these are going to get eliminated. It happens all the time at bottoms where there's got to be attrition. And so these are all signs that we're getting close. These are all signals you want to learn about because they're cycles. They happen all the time. Well, they don't happen all the time, but every it seems like every 6, 7, 8 years we get these cycles where we go through actually it's probably closer to 10 years. We had the internet bubble of 2000. We had the financial collapse of 2008. Now we're in the 2022. It seems like about every 10 years you get these big cycles happening, but they have very similar characteristics. And I learned these. My first one was the internet bubble, and that's where I learned all this stuff that I'm teaching you now. And yours is gonna, if you're brand new to trading, yours is gonna be this one we're in, whatever they end up calling it, the COVID collapse or something like that. I don't know, but yeah, there's not many places you can go right now. Even bonds. Remember, bonds are still in the downtrend, and so where do you go? Where do you put your money right now? Question: is there a reason I can't add GBTC to my watch list? I don't know. You should be able to add it if you type it in. And then go to this little green button right here. You should be able to add it to your watch list there. I don't know why you wouldn't be able to add it. And it doesn't have to be GBTC. It could be, I think Coinbase is one that kind of reflects crypto. It's been in a downtrend. I don't know if that chart looks as well. It's pretty similar to the Bitcoin one. And it's not crucial that we follow or watch Bitcoin. It's not. It really isn't big enough to be a driving force in the regular markets. Like the movement of the dollar has an effect on stocks. The movement of commodities, oil has a movement on stocks. Gold can have can tell us something about the movement of stocks. Bitcoin just isn't big enough yet, but a lot of people do trade cryptocurrency, so I did add that into the watch list to help some of them out. And what I'm telling them right now is that it's getting ugly, and you're in a downtrend that could continue to get worse. Although we could be bottoming here pretty soon, and you're starting to see a little bit of the panic in the crypto markets, and it could be that they end up bottoming first. The panic starts there, and maybe it ends up in our markets here pretty soon. But you're starting to see it in the crypto markets. You're starting to see a little bit of that panic in those crypto markets. All right. Let's see. We'll have to check this at the end of class to see if we're coming off the lows at all going into that last hour. I don't anticipate that we will, or that we'll come off them very much. But like I said earlier, I really don't have. Let's go to the portfolio here. I really don't have. I don't want to get into any new trades. The problem is that we saw that earlier. Remember when I showed you the indexes? How many stocks are sells right now? What's our criteria for trades that we want to add to our watch list or add to our portfolio? We want to see a 98 strength rank and a stock going from hold to buy. Well, there's no stocks. None of the stocks are going to buys right now. They're going from hold to sell, and so it is a sign that we we still want to be on the sidelines a little bit here. Keep our, might want to keep our inverse ETFs. But let's go through well, first of all, I need to double check here to see if anything's gone below my stops. NOC is at 4. We're still a little ways from the stop there. USO's fine. CEIX, still okay. Well, don't worry about these two. I'm not worrying about. I put the stops in because I've got to calculate. I've got to use it to calculate my my risk for the portfolio. But remember, I'm making my decisions a little bit different on those inverse ETFs. I'm not basing those off of signals or anything. They're just hedges. But let's go through our charts here on these. So NOC is down. NOC is down, but our stop is down below here. I still want to have some exposure to these defensive stocks, and I'd like to. Boy, if the market starts rallying back again, and I'd like to get back into these Raytheon and what's the other ones? There's a bunch from there, but they're going to make money in the next few years. I just don't see how they're not going to do well. The problem with them right now is just they're caught up in the indiscriminate selling that's going on. And there's a lot of companies like this right now that are down just because everything's down. And remember, stocks can drop. It's not always selling that causes these stocks to drop. It's a lack of buying. There has to be buying constantly in order to hold stocks up. If people stop buying, the stocks will drop. If they start selling, the stocks will drop. So you're seeing some companies where you look at it, you're like, boy, fundamentally, these companies are good, and why are they dropping? It's just a lack of buy. Nobody wants to buy right now, and so it's got to go down. Even if you can see these companies they're going to do well, they're dropping right now, and you can see it's been orderly. There hasn't been. Maybe that was a pretty big down day, but for the most part, small down days right here. It's just the lack of buyers. And I wouldn't be shocked if you do see the market rip a little bit here that these will take off. They should, and if they don't, that could be a little bit of a warning sign that they're not participating in a rally there. But I'm hanging on to that one. Oil again looks like it's trying to go higher again here. We had those two big down days on Monday and Tuesday. Not big up days yesterday and today, but it's at least staying in the sideways range. I mentioned on Tuesday we didn't want it to really dip below here. I think that's where my stop was below there. I don't think it's going to get below there. You never know, but it looks like it should hold up okay right here. CEIX, this is that coal stock. It's down a little bit, but I think my stop is down below this low right here. This looks like it could be a little bit of an ABC pattern. So we're just letting that one kind of keep going. I guess I could switch these to signals here. All right, so SOXS, this is that inverse of the chip sector. So when the chips are going down, this is going to go up. We are in the extreme reversal risk range, but it could go further. But the problem is that the price action today, whenever you see an upward move, and then here's where we opened, and then we came all the way down to here, and then now we're back up again as the market's dropping. But this is a little bit of an exhaustive type candle, meaning that the buyers are looking like they're getting a little bit exhaustive, which again, that means it's the opposite. You have to think opposite here, that maybe the chip stocks could start to rally a little bit. Like I said, I don't know if I want to just get out on that candle or wait until we actually do see the chip stocks rallying and this is dropping. Because if they do move down again, this could continue to go higher. I may hold on to this one, but I might get out of the SARC, because SARC is showing, let's go back to candles on this one. It's showing a bearish reversal today. Here's where it opened. Here's where it's trading right now. There was a bearish reversal candle. It dropped a little bit off of that. Here's a bearish reversal candle. It dropped a little bit off of that. Here's a bearish reversal candle. It dropped off of that. So, and this one, I think it's closer to the right side of that extreme reversal risk. So maybe what I'll do is just get out of this one today and then wait for a little bit. That way I've got a hedge. If we do drop tomorrow, I still got the SOXS to go higher. And then if we see any sort of bullish reversal tomorrow, then I can get out of that other one. And then hopefully the bullish stocks I'm in will keep going up if the market rallies. And then we don't have, we're not losing money on these to have that kind of stagnate our account. So as you can see, it gets a little tricky sometimes, and this is not the normal way that you're going to be managing your portfolio, just because we're in a unique time. And but I'm teaching you some things that you can use. I did get feedback from one of the students that said they've had really nice returns over the last month or two, or on these two trades, SARK and the SOXS, these inverse ETFs. So if you've never used these before, and this is what my goal was, is to show you, hey, you don't have to just sit in cash as the market drops, and you don't have to. It doesn't mean you can't find high strength rank stocks that you can get into. It's that you can hedge it a little bit by using these ETFs. Now, there's a lot of these inverse ETFs. What I liked about these ones is they have that potential to make multiple dollar moves. On these other ones I have listed here, like if you want to just be short the S&P 500, we could have bought the SH, but look at how the movement of the SH. It went from down here at 14 all the way up to here to 16. That was only a $2 move. How can I make any money on that? How can I offset any losses if this is a massive move up and I'm only making $2? If you look at the same trade using the SOXS, it went from 43 up to 6. That's a $20 move. So, yeah, I tend to try to find the inverse ETF. Well, first of all, you also have to make sure that there's liquidity there, that there's people trading it. But typically, you're not going to be buying 1,000 shares or something. You're going to be buying, 100, 200 shares. You're not going to have too much of a problem with liquidity in that case. Anyway, so we'll see how that plays out. I'll keep an eye on that. But that's probably what I'll do, is I'll probably get out of that SARC. Now, again, I got to wait till the close to make sure that is going to be a bearish reversal candle. And then I'll just hang on to the SOXS at least another day. We'll see how things play out tomorrow. Like I said, I went through a lot of the sectors here. I went through the watch list. There really wasn't anything that I want, and I know this is the stock specific class, so a lot of people tune in because they want trade ideas. But I'm telling you, there really isn't anything I liked. The closest thing I liked, which is, so at least we'll have one today that we could consider, is it is actually under basic materials, and it's the fertilizer stocks. And actually, it's gone from sell to hold today. So I went under the sells right here, and it's a CF Industries, 97 strength rank. And we can switch the signals on here. Oh, it actually went back to a sell signal. It wasn't a hold signal. That's why it waits till the end of the day before it updates it in the system. So this is one that you'd still be waiting for confirmation on anyway. But hold on here, let's go. But what I like about it is that you got this big run up. You've already heard me talk about the farming industry, commodities. These are things that on Tuesday I talked about this with the Ukraine is like the fourth leading producer in the world for wheat. I think that's accurate or pretty close. It's like fourth or fifth, but it's huge. And there's no farming going on with the war going on. I mean, that's a massive shortage of a very important ingredient in human life. And it's got to be made up somewhere. And so you've got farmers scrambling to make up for that. And that means fertilizer. It means, farming on land that they haven't been farming on, or switching to, maybe they're doing less of another product or another commodity and more of wheat or whatever. I don't know. I'm not a farmer, so I don't know what they're doing, but they're going to need these fertilizers. This looks like a pullback within the uptrend. I think you could wait for that to go, at least go back to a hold signal, if not a buy signal, as confirmation. Now, there's a few of these that I like. If we go back to that basic materials here under fertilizers, I like Mosaic is one. That's a big one. IPI, look at Mosaic. Again, it looks like an ABC pattern right here on the pullback, waiting for it to just kind of get back to at least a hold signal, if not a buy signal. But these are ones that we might want to have in our, I don't know if I have these. I think I have these in the watch list, and maybe I don't. If not, I'm going to put it in there. IPI. Now these are at sells right. Look how far that one's pulled back, though. You want it to start acting like it wants to go up first. Don't just jump in it just because I'm talking about it. But these are ones you could put in a watch list. Now, again, a lot of these are selling off just because there's indiscriminate selling going on. So, but you do want to make sure that when the market is rallying, that these are rallying with it. If they're not, that's a warning sign. You'd have to kind of, you'd want to wait for it to give you a little bit of confirmation. And again, I need to, as a disclaimer, point out, anytime I start talking about the fundamentals of something, I'm not an expert in fundamentals. I'm an expert in technical analysis and trend analysis and price action. So I might have an opinion that these stocks would do well in the current market environment, that defensive stocks like Raytheon and those will do well in this environment. But the key is going to be the charts. What do the charts do? That's the main reason to be getting into these, and that goes with anything I start talking about. I can have opinions or things like that on certain sectors or groups, but the bottom line is always going to be the chart. What is the chart telling us? And you'll see me abandon an idea very quickly if suddenly all these defensive stocks start selling off in a big way and they're in a clear downtrend. I have no problem just saying people aren't buying these. They're not working. Let's go focus on the ones that are. I have no problem abandoning, some of these groups to find, because all I care about is the ones that are going up. Who's acting like an uptrend? I don't care what the story is. If they're acting like an uptrend, that's what I really want to be part of and look to trade as those ones that are continuing to move up. All right, so I apologize that we didn't have a lot of new trades to consider. I think we'll be close, especially if we do see that rally in the market. Now, I do think a rally in the market would be short-lived, but it doesn't mean that we can't take advantage of it. So we could increase our portfolio size a little bit, make sure we have stops in place in case it turns back around. I'll be looking for, if we look at, so the last time we rallied back in March, we did get, we did get a drop, a bearish reversal candle here, but it shook it off and went higher. So back in here, I was a little timid, but it had this little drop and it tried to rally right here. And then on this little bearish reversal candle, I got pretty aggressive with some bearish trades or put option trades. If we do the same thing, we should get a signal that it's rolling over again and could start to drop again. And hopefully we do. And if that happens, then we can start, reducing our portfolio size a little bit, and getting back into the SARC and the SOX and all that kind of stuff as well. So, like I said, I'll if you continue to join the updates, I'll let you know when I think things are changing. But that's what I would look at between now and Tuesday, is to see if we see these markets give us some sort of bullish reversal and maybe start to bounce a little bit. It may not be much, but we'll see if it plays out that way. All right, thanks everyone. Have a great week, and we'll see you Tuesday for the next market update. Bye now.